Hello and good morning everybody. I am Abhijit Roy, co-founder and CEO of GoldenPi, the online platform of choice of lakhs of users for your fixed income investments. Today, I'm super thrilled to host this session and I'm very confident that each of you in our audience would have this equally thrilling and engaging. So let me set the context for our conversation today. See, the bond market has seen gradual traction from retail investors in the recent years. There, public issuance of non-convertible debentures or NCDs have been the popular route through which retail investors participate in the market. Just to give you a bit of a statistic on this front, there were around 34 NCD issuances which happened in the previous year, through which corporate raised around 10,000 crores. Of these corporates, non-banking financial corporations or NBFCs as we call them were at the forefront because capital is the dry powder, is typically the raw material through which they scale up the business. Today, we have the unique opportunity of learning about one of the most marquee NBFC companies in India, NAVI. Ladies and gentlemen, it's my immense pleasure to welcome Mr. Sachin Bansal to our discussion today.
Thanks, Abhijit. Thanks, glad to be here.
Sachin does not need any separate introduction. He is the one who revolutionized the e-commerce market in India through his multi-billion-dollar enterprise Flipkart. And now he is building NAVI in the NBFC space in the capacity of the founder and CEO. Along with him, I have Mr. Shobhit Agarwal, who is the business head of NAVI. Sachin and Shobhit, very warm welcome to both of you.
Thanks, Abhijit. Thank you.
So to our audience today, we will look forward to learning about NAVI, right? The cool things that NAVI is doing and disrupting the market, right? And to know about perhaps your plans for world domination, right? So with that, I want to put a word to our audience today. Please keep this very interactive, right? During our conversation, at any point you have got any question, please post it in the Q&A. At the end of the discussion, I'll be pulling out those questions and Sachin and Shobhit will be answering them. With that, gentlemen, let's get started.
Yep.
Cool. So Sachin, first question to you, right? So you entered into the e-commerce marketplace when it was hardly existent in the country and you built it up from 0 to 100. And now you're building NAVI in the NBFC space, right? But when I look at the NBFC space, there are around 9,500 NBFCs already registered with the RBI, right? It's a super crowded space. So just was curious to understand what's your philosophy of entering into a dense market?
Yeah, Abhijit. So I think it's a good point, right? So when Flipkart started, there were probably like maybe 2 or 3 e-commerce companies in the country. This is a lot more crowded. But this is also a much bigger space.
Right.
The opportunity size is much bigger. The number of customers is larger,
right.
Who need access to credit
right.
of some form. And I've seen people are trying different strategies with their NBFCs. What we are trying to do is we are trying to get access to credit to millions and hopefully over time hundreds of millions of people. We believe that is an unsolved problem, and we believe nobody is solving that at scale. And it has to be done, and we believe it needs to be done in a low-cost manner. It has to be done in a customer-friendly manner, and it has to be done in a manner that is scalable, right? And we believe that the approach that we are taking, which is of making it self-serve, making it accessible through digital channels, that is the right approach when it comes to providing access to the masses. Given that India already has 600 million smartphone users and will have
right.
More than 1 billion in less than 10 years from now,
right.
We believe this has to become the medium of access of credit as well.
Got it. So Sachin, we would be very curious to know how you started your journey, right? Once you decided that, okay, let me get into the NBFC space, let me disrupt this. How did you start your journey with NAVI? What were the initial challenges you faced and how did you solve them?
Yeah, I think, see, Abhijit, when we were starting off, this ecosystem was very new. A lot of things that we know today, things like, for example, account aggregators,
Right.
or the way KYC happens today, for example, payment systems,
Right.
etc., were kind of underdeveloped at that time. Thoughts around underwriting, using machine learning for underwriting at large scale, being able to process large amount of data at low cost. These things were solved in the non-finance side of things by tech companies, but nobody had tried that in the finance space, right? So we kind of pioneered this approach. We have made a lot of progress in the last 4 years since we launched.
So I'll just pause you for a minute over here because I would want to emphasize on the point, and to which you can shed a lot of good light over there, that you're into the lending space, right? And lending has been typically probably one of the oldest professions known to humankind, right? In our country itself, lending became a formalized industry in the form of NBFCs in the 1800s, right? So we are talking of a 150-year-old industry, right?
Yeah.
So definitely, as a new entrant, you are doing something very different, right? Which would be disrupting. Please share your details on that, which would be a great learning for the audience today.
Yeah, so in some ways, Abhijit, you're right that it's a multi-millennial problem. I mean, it has been a problem that humans have been trying to solve for thousands of years, and will continue to be a need for thousands of years going forward as well.
Right.
We are trying to take the next step forward.
Got it.
In the lending space, right? Which will be very unique, not just for India, but really globally as well.
That's a plan for world domination, ladies and gentlemen. Yeah.
So I think the way, for example, when you had to solve the payments problem in India, we had to invent something like UPI, which is very unique to India.
Right.
I believe something like that has to emerge for India. The ability to provide access to credit to billions of people in a cost-effective manner requires innovation.
Right.
Which that kind of, for example, this kind of population doesn't exist anywhere in the world, except maybe China. So in India, the approach has to be very different to the way access to credit has to be provided, the way cost has to be managed, collections has to be managed, has to be very, very unique. And we are creating that ecosystem at NAVI.
Got it. My next question to you is, how does the business model of NAVI work? Like, what is the customer cohort that you're serving for, right? How are you sourcing your customers, your acquisition strategy, right? And what are the various products and services that you're offering to them?
Yeah, Abhijit, we took a very important call very early on. We said that there's a lot of people who are serving the upper income people. There are relationship managers, there are banks and NBFCs which are chasing the upper income guys for loans who don't really need them.
Yeah.
So I mean, the famous saying is that when you don't need money, then everybody wants to give you money, right? So and there are a lot of players like microfinance companies which have, like, for example, one of our companies, which is Chaitanya Microfinance, they're serving the lower income group. But nobody was really serving the middle income. And that's where we believe the biggest opportunity of India is. There are lots of unserved or underserved people sitting in the middle income population. They're unsatisfied with the service that is provided to them, and they are credit worthy. And that's where we are focusing on. We don't want to give out very small ticket, 1,000, 2,000, 5,000, 10,000, 20,000 rupees loans. We want to also not be operating in 50 lakh rupees to 1 crore loans, but we want to be in like the middle segment where people.
And how do you acquire them?
See, our app is actually a multi-category app. NAVI is not just about lending. The app where we source loans from, we have multiple opportunities to invest on the app. There is NAVI Mutual Fund, which is available on the app. There is gold opportunities. You can invest or you can insure yourself. There is insurance available, and we are going to be launching UPI very soon as well. So we have a very large amount of footfall coming on NAVI. We are already top 5 apps in the country in the
And
finance
what's the
section.
rating? Google app rating?
4.2.
4.0. That's very impressive.
Yeah, it's very. I mean, I think our tech team has done an excellent job. It's a super smooth app, very simple, no nonsense. There is no major frills over there. We have kept it very, very simple. People love that.
Right.
And footfall is amazing. Number of people using and downloading every day is good. People coming back for repeat transactions is very good as well. And that gives us a sense of their credit profile as well, right? Because when they do investment with us and they do other kind of activities and overtime payments, we are able to get a very good sense of their credit profile, and which we are then we cross-sell them personal loans, and we select the best customers out of our pool, and then we offer them.
Understood. So Sachin, one question, and Shobhit, to you as well, right? The question would be, you specifically mentioned that you get a very strong footfall onto your digital arena, right? And you are able to curate that data, right? Sieve through it and get the best of the borrowers, right?
Yeah.
You are able to evaluate their credit worthiness. And I firmly believe that in the back end, you would have a credit worthiness engine that you would have built up, right? So I'm just wondering, now tech infrastructure is the game of the coming years, right? And you have built that engine. Are there any plans of, maybe lending it or leasing it to other NBFCs, which in turn, will improve the whole NBFC quality in the country?
Yeah. So actually, it's a good point, Bijit. So what happened is that when we started scaling up, we started borrowing from the market, right? We started going to banks, other NBFCs, and said we need money because we can't just grow on our own equity. We need to leverage it because we are an NBFC. We are able to allow leverage, right? So those partners wanted a piece of the action themselves, right? Instead of just being a lender to us, they wanted to participate with us.
So is it co-lending that you have?
Yes. So we have opened up our co-lending rails. Close to 1,600 crores of our book is now sitting off balance sheet.
Got it.
With our partners. We have, I think, more than 30 partners now.
What would be the profile of those partners, Shobhit?
These are big NBFCs, maybe.
No, so co-lending, we have 4 partners as of 31st March, and these are all big NBFCs. And the pipeline is huge. A lot of banks, private PSU banks, they want to participate on the co-lending front. On our NAVI Lending Cloud platform, we are also doing sale of portfolio very actively. This is to more than 12 partners now, which again includes banks, NBFCs. And we are extending our NAVI Lending Cloud platform for all types of loans. It's just personal loans so far.
And we have PTCs there as
well. Yeah.
Got it.
So all in all, lots of partners, I think, so same partners who we were borrowing from, they liked what they saw,
right?
Decided to participate in this.
Perfect. So RBI has a rule of 80-20, right? In the co-lending means, right? You would be...
We retain 20%.
You maintain the 20% of the total borrowing, and the rest 80% is funded by your NBFC or bank partners.
Yes.
Got it. That's very interesting because, I think with that what happens is, good quality investors, good quality borrowers, right, actually gets into the market, right? They're able to get the credit, right? And the overall credit worthiness, that level of the market improves.
One more thing happens is that the cost of borrowing for a borrower comes down.
Correct, right.
Because now multiple parties are sharing that risk.
Right.
And we are able to offer a lower rate to the customer.
Right. That's a great point. Now, you mentioned about your customers coming onto your platform, checking out the products, right, and taking the loans. What would be interesting to know is how has been the customer traction in numbers, right?
Yeah.
Like if I have to understand how many borrowers are there on the platform as of date, what is the total amount lent to them, what is the AUM under the NBFC arm. It will be great to know about those numbers.
Sure.
Shobhit, you want to
Sure. Yeah. So as of 31st March, our AUM stands around 7,600 crores, and 90% of this AUM belongs to personal loan category. So that's our most scaled up product. We have more than 1 million loans outstanding as of 31st March. And as Sachin said, we are trying to underwrite high quality borrowers, and that's why our approval rate is also on the lower side. which means we have a lot of customers, 10 times more customers going through the funnel for us to be able to, let's say, have 1 million loans outstanding. And broadly, 15% of our AUM is off balance sheet today, which is through sale of portfolio and co-lending.
Got it.
And that percentage is going to increase over a period of time as we scale up.
Right.
Because there is huge unmet demand from these partners to offtake these loans.
Understood. So if I understand the customer trajectory, let's say rather than coming to Navi, I go to a partner, right? A partner bank or a partner NBFC. I get evaluated over there with your engine, right? And once I turn out to be credit worthy, right? My credit score is meeting the requirements. Then the bank funds me and you fund me with that, right?
Yes.
Understood.
But most of the business happens, Vijit, on our own platform.
Got it.
So we retain most of the loans 100% ourselves.
Got it.
A smaller portion of the loans are shared with the co-lenders today.
That's a very important indication of the stickiness of the platform.
It's also an indication of the fact that we are backing the loans that we are giving, right? We are not just originating loans.
Right.
Right. We believe that our underwriting engine is so good that we are willing to take it on our books as well.
The next question would be then, what are your GNPA and net NPA rates, right?
Yeah. So we have been maintaining our asset quality at very healthy levels. Our GNPA at this scale is around 1.7%, and net NPA is 0.3%, which shows that these delinquencies are very well provided for. And that's probably one of the reasons why we got rating upgrade from CRISIL last year in December, because asset quality is holding up at higher levels of AUM and disbursals.
Got it. So you are being able to maintain the low levels of NPA because you would have a very efficient collection mechanism. At the end of the day, when you borrow, you got to collect back the money, right? What is the collection mechanism that you have set up with which you are being able to maintain these low levels? Is it through tech? Is it through manual intervention, blend of both? How is it?
We have a very strong team doing collections for us. We have some of our best engineering teams working on this problem as well. Of course, it's a tech-based platform that we have built. A lot of collections happen digitally by just sending messages and notifications to users. But we have manpower doing telecalling to remind people even before the due date sometimes, depending on the risk profile of the user. And then we do follow-ups post if there is any delay in the payment. And now we have in-house field collections as well. We do follow-up on the ground with our own employees.
Got it. And what would be the size of the collection team?
Size of the collection team put together, everyone put together will be close to 1,000 people working on it.
That's an impressive size. So I think with that, it will become important now that let's move towards the hardcore numbers of the business. Right? Let's talk about the financials. Right? So for our viewers today, let's have some very transparent conversation over there. Right? As an NBFC, what has been your revenue in the past 3 years and what has been your profit after tax since the past 3 years, right? For our viewers today, please note that profit after tax, the final net amount as a company that you would get is of significance for an NBFC and not the profit before tax, right? So we will talk about the PAT.
Yeah. So Abhijit, our revenues have grown multifold in last 3 years because the business has also scaled up significantly during that time. Our interest income 3 years back was around 200 crores. Then it became 300 crores next year, and now it's around 1200 crores. So that's a significant jump on the interest income side. And we have turned the corner on profitability. Last year we had losses because we were setting up the business, we were acquiring customers at a higher cost. And from 65 crore of loss, today we have 172 crore of profit for the full financial year.
So March 2023, yes. 172 crores of PAT.
Yes.
You were in the black.
Yes.
Yep.
That's a great number, guys. Yeah.
And of course, AUM has also shown the same trajectory. It has grown multifold over 3 years.
Got it. You mentioned one point, a very interesting point. I think Shobhit, you mentioned that last year you got a CRISIL upgrade, I believe, to credit rating A from CRISIL A stable, right? And before that it was triple B plus?
No, A
A
minus.
minus,
A minus. Got it. Okay. So the question would be, to be able to get a credit upgrade, an NBFC needs to do some things very right? Present that case before CRISIL, they examine that, right? And then they give you the credit upgrade. What were those things that you did right which gave you that upgrade? It would be interesting to know.
Yeah, so we have been doing business, lending business the right way. It's just that rating agencies or any other monitoring agency would like to see the seasoning of the portfolio. They would like to see how the portfolio is behaving over a period of time. And once they start getting confidence around that, they of course improve your credit profile. So our numbers have been there since second year, but
Right.
as see that those numbers are holding up. As we are growing, as we are having higher level of AUM, they give you an upgrade. Now the positive triggers to this rating will be sustained asset quality and continuous improvement in the profitability.
Got it.
Same is the downside trigger. If we lose track of let's say our asset quality or our leverage goes beyond 3.5x, then that will be a negative trigger.
Got it. As an NBFC, you're allowed to borrow a leverage limit of 15x, right?
So you can have capital adequacy ratio of up to 15%. We are operating at 28% as of now, so very comfortable for the kind of lending that we are doing.
Right.
And of course, we have a lot of room to raise debt, given our equity into the business.
Right.
But we are quite aware of the rating covenants and stipulations and the way we should operate. So yeah, we work towards improving credit profile of our company so that we borrow at lower cost, we can lend at lower cost,
Right.
and get into that positive loop instead of getting into very, very risky business.
In fact, during the rate cycle hike that has happened in the last few quarters, right? Our rates have not gone up as much. Our borrowing rates have not gone up as much during that time.
That's great. You started off during the COVID period itself, right?
Yes, we did.
So how did you fare during the COVID period? Did you give moratorium to your borrowers? Was there certain things? A lot of NBFCs had tremendous amount of pressure, right? Especially collections were pretty much on the lower side, right? How did you guys fare during that time?
I think, so we gave moratorium to people as well. So it was interesting to launch in the COVID period, given that...
Probably the most challenging of the times for
it
an
was the
NBFC.
most challenging time.
Yeah,
The thing is, frankly, I mean, what happened is that we were ready with the launch. I remember just before March, in February or March of 2020, we were ready with the launch.
Right.
And immediately at that same time, COVID lockdown started, right? In the, I think, March end or something. So firstly, we waited for a month or so. We said, okay, maybe this will all pass because there were, but when it was clear that this is kind of going to be staying for a long time,
Right.
We said we are ready. It's better to be out there in a small manner at least and learn,
Right.
rather than to sit at home and just wait. And I don't know how much
Yeah,
we're
for
going to wait
indefinite period of time.
for 2 years or 3 years.
Yeah.
We'll have to wait, right? So we said we'll go out there. We knew that the losses will be slightly higher because their physical collections are not possible. Customers are losing jobs and stuff, so there will be some losses. But at least we will learn how this business works, and it was kind of the whole team was new,
Right.
and they were doing this for the first time, right? So we launched. I think it was, in hindsight, a great decision because we got to learn during the toughest times that any NBFC can face. If we would have not gone through that, we would not be so resilient as we are today. Our knowledge base would not be as good as what it is today. The whole team has the knowledge and scars
Right.
of COVID, and those are something that helps us now.
Yeah, I think this would have sort of great learning for you guys, right, to emerge stronger. Because I personally have seen a host of the NBFCs who started out during good times, right, they're faring well. Once COVID hit, right, the lessons were too hard for them, right?
Yeah.
So, and I believe tech, the idea of revolutionizing with tech would have probably triggered during these COVID times.
It was even added pressure, right? Because physical follow-ups are not possible.
Not possible, yeah.
We can't meet the customer for assessment.
Yeah.
or anything. So we were forced to digitize, and that actually has been a great thing for us
Right.
so far.
So as an NBFC, just moving on to the next topic, right? Most dominant topic, right? Regulations. RBI would regulate an NBFC heavily, right? So, lot of regulations keep on changing, and there was one of these buy now, pay later, that regulation. Some NBFCs were doing that. RBI put in a stop. Did it impact you guys?
No. See, we don't. So Abhijit, what we have done so far at NAVI, and if people who have followed us for a while, they will know that we have stayed away from short-term, fashionable things. Right. So far, we don't want to do things that are a fad.
Right.
That may or may not last for a long time. Right. As I said, lending is is thousands of years old problem. It's going to be a problem thousands of years old from now as well. So, which means that keep it simple. Don't overcomplicate it. Don't keep it. Stick to the basics.
Right.
That's what we want to do. We don't want to do any fancy stuff. We want to keep it simple, direct, easy to use, easy to understand for the customer. And we believe that if we do that, we are generally on the right side from a regulatory perspective as well. In fact, we have been pretty proactive on most regulatory fronts. In the last 12 months, the amount of change in regulations that have happened when it comes to digital lending especially has been more than any other industry would have ever faced. Any sector you can look at. And it has affected us in very, very small ways, right? So there's no major impact on us. We have adopted fast, and the best part is that because we have our own in-house technology, we have our own, and we have kept things simple for the customer and from a regulatory perspective. I think it has helped us manage this very well. Like for example, recent change, right? The most recent change was video KYC was made mandatory by RBI. We were ready within 48 hours. 100% of our customers going through video KYC. We had zero impact on business. Disbursals, collections, nothing got impacted.
Yeah, that's a very fast turnaround time. Any other regulations, right? Major ones, significant ones, which you had to cope up immediately because it would have an impact on the business, and you turned around pretty fast the ship.
There was one large change which I'm actually very supportive of, which I was pushing back when I was in Flipkart as well, was that localization of data, which came as a big change, which I think is a very welcome change. It keeps India's interests protected against anybody who can misuse that data globally. So we adopted that very fast as well. The challenge over there was that we could move our data very quickly, but our vendors that we were using, our partners that because we depend on dozens of partners. They were all scattered.
And tech partners as well.
Yeah, they were all scattered all over the world. Somebody was in Singapore, somebody was in US, somebody was in Europe somewhere. So we had to work very closely with them and move them fast. We did that. So that was a bit of a challenge, the moving the vendors. But I think other than that, has been pretty good, I think.
That's great. Because localization of data has been discussed in the parliament since long.
It is, I think, it's the right thing to do. Even European Union is doing the same. China is doing the same. US doesn't allow its own data to be sitting outside of US. Why should we do that?
Makes sense. Totally. Yeah. So I understand that NAVI is going to issue NCDs through public placement, and that opens up on 10th of July, right, which is next Monday. Right? Can you throw some light on what is the amount of money that you guys are looking to raise through this public placement?
Yeah. So this is our follow-on offer. We did our first issuance last year in May, which was a good success. This issue is a 250 crore base size plus 250 crore of green shoe. So overall 500 crore issuance, and tenors range from 18 months to 36 months. So we have three series: 18 months, 27 months, and 36 months, and monthly and annual coupon variant. So customers can or investors can choose as per their risk profile what kind of tenor they want. They are priced from a yield of 10.18% to around 11.02%. And issue opens on Monday, and it will be listed on BSE and NSE, and it's a secured, redeemable, non-convertible debentures.
Got it. And the minimum amount investable would be just like for any other NCD,
Yes.
the public issuance, which is 10,000, and applicable through online, via UPI or through offline route, right? Both modes are
Yes.
possible, right?
Yeah.
What would you use the funds for?
Again, we are growing our lending business. We are growing our balance sheet as well. So the funds will be very useful from that perspective. Yeah. So that the growth of home loans is also now starting up. So it's about 10% of our business is sitting as home loans, slightly less than 10%. We want to grow that as well.
And are you looking to, enter into any adjacent verticals in the lending space?
Yeah, something that we have been now discussing.
I asked this question because when I examine the NBFCs, who have been there for quite some time, they've been doing across the board, right? Now you have all the capability as a tech player, right, to do it even faster.
Yeah.
Then why not take up those opportunities?
Yes. So Abhijit, it's a good question, right? So we have been thinking about how can we get access to credit to even more people, right? So what will easy access to credit for 1 billion people look like,
right,
in India? We believe that the UPI rails that exist could be a good way to get that access to credit to billions of people,
right?
And we are keen to participate in that. We are again discussing with our partners, regulators, NPCI, etc., to see how we can make that happen. But that's one thing that we are keen on.
Got it. We have come literally towards the end of this discussion. Just a couple of more questions, more on a generic perspective, right? With a very different optics of of what you have been there and done that in the industry, right? So you did your engineering from IIT Delhi, then you joined the industry, then you built Flipkart, 0 to 100, right? And now you're building NAVI, which is in the NBFC space. For me, as an outsider, it looks like totally two orthogonal domains, right? So how did you manage navigating from one very different domain to another one and build up this marquee company again? How do you manage to repeat the show?
So principles of business are similar, right? So they don't change from one business to another. Right. There are some core principles of how you build organizations, how you think about strategy. They remain similar. And of course, but there are a lot of similarities in the way things are happening at Flipkart versus here. For example, use of apps for sourcing, the way we build technology, data science. That was. But one of the big things is that I've learned from Flipkart was running large-scale operations on the ground nationally.
Right.
That was something pioneered by Flipkart for the first time, right? We're doing our in-house logistics. No e-commerce company used to do logistics on their own. Same way, NAVI is going to be doing its own collections on the ground, or in-house, right? So that's something that those are the principles that I'm bringing here as well. And I believe that will be a game changer in the industry. Nobody does that at large scale,
right?
And it's very fragmented space, run by very, very small companies all over the country, thousands of them. But we want to organize this space also, the collection space as well. We can improve customer experience and as well as the collections performance as well.
Got it. And any last words for budding entrepreneurs or current entrepreneurs who are from the tech background?
So, a lot of times I've seen that entrepreneurs go after small problems, and market size, revenue potential is not properly assessed before people jump into solving a problem. And that leads to problems, right? Because either investors or entrepreneurs themselves have calculated the how much revenue that space has. But again, it's not easy. Sometimes when you are creating something new, you don't know for sure. But
you go for the passion of it.
yes,
just that.
yeah. So at least there should be a large number of people who need the product. I think that's very important as well. If the product is successful, there should be large revenue potential of that. I think that's something that people should assess. For example, in finance, I think in India, financial services is the largest revenue potential industry. I think 40% of all national stock exchange market cap is financial services.
Right.
Probably 50% of all revenues of NSE will be financial services. And within financial services, lending is the largest revenue driver. Right? So I think we are in the right space. We are in a very good place. We have gotten a good start. We have built a good team, and there's a huge opportunity now to just grow.
Right. And anything for tech entrepreneurs on not just focusing on tech, thinking about other perspectives, because it's something that people bear a myopic view sometimes. So it's good to know your perspective.
I think most engineers learn this the hard way, that it's not just about writing code when they jump into building a company. It's also about hiring the right people and all the non-sexy stuff of building out operations and things like that, right? So which I think is, I think you can say it as much as you want, but people, I think they will learn, mostly people will learn the hard way, as I did as well when we started.
Cool. I think, we had a very intense discussion with you, Sachin and Shobhit, right? Great learning for me personally, great learning definitely for our audience. Wishing you both tremendous success in the public issuance of the NCD. Right?
Thank you.
With that, ladies and gentlemen, we'll now get on to the Q&A session. So I'll just pull up the questions. It's a first question relevant to NAVI, and the question is from Mr. Sudesh Nair. The question is, what's the PAT? We covered though it, nonetheless you can re-emphasize on it. And what's the projected PAT and loan book for the next year, meaning FY24?
So PAT is 172 crores. And unfortunately, we can't give projected number in terms of AUM. But the theme for us in financial year 23 was to have building blocks in place. It was a foundation year for us for the lending business. And financial year 24 will be the year for growth.
Got it. Let's move on to the next question, which is from Mr. Paramasivan Vella. And the question is, as one of the most successful entrepreneurs in India, what's your choice between equity capital and debt capital in the early stage of the startup, and will you leverage to scale the business?
I think it's a mix of both. We don't want to over leverage ourselves and run at the edge of what is allowed regulatory.
Right.
For example, I think Shobhit mentioned that we are allowed 15% capital adequacy ratio. We are at around, I think, double of that approximately right now.
28%.
Yes. So, which is very comfortable.
Right.
So, we want to operate in that kind of zone for a while until we fully leverage out, which will be a few years out. Because business is still growing, there could be still unknowns that we need to be worried about. We'll be raising both debt and equity over time. We have been constantly infusing equity into the business and NAVI FinSerV on a regular basis, and we'll continue to do so as it needs. And then we'll raise debt also in parallel. Right, both of them.
One question from my side on this front. NAVI as a group would have other businesses also, right?
Yes.
So if you could just throw some light on that.
Yes. So we have a very nicely growing mutual fund business now.
Got it. I think that would be news for a lot of the viewers, right? NAVI also has got a mutual fund business, right? So mutual funds from
hopefully
NAVI.
I hope it's popular enough now. But it's one of the, so we have been constantly being in the top 3 in terms of tracking error of Nifty 50 in the last few quarters.
Got it.
And which is for a fund of our size, it's actually a very...
What's the fund size?
Fund size will be in a few thousands of crores now. It's still early. Hopefully, we'll grow into much bigger size over time. But we have managed to hold a low tracking error, and most of it is index funds today, which is which customers like because it's very simple and it's only available through our own app. A little bit on other wealth aggregators, but mostly on our own app. Then we have an insurance business where we do health insurance. That business is also growing very nicely now. It's generating profits as well. And we have a new payments business coming up as well.
Got it. So that's new vertical which will be getting.
We're good, yeah, in a few weeks, yeah.
Excellent. So next question is from Mr. Neeraj Kamtikar, and the question is: NAVI is lending unsecured personal loan. Then what is the security for NCD holders?
Yeah, so these are secured NCD issuances, and NCD will be secured by the receivables, by the loan receivables, and the extent of security cover is 1.1x. So that's how we borrow money from institutional partners as well.
Right.
We have almost all the private banks, larger NBFCs and PSU banks lending to us on the basis of the security itself.
Understood. So for everybody out there, right, an NBFC would essentially securitize the NCD that's issuing with the receivable cash flows, right? And that is the standard process across the industry. Now here, as we understand from Shobhit, that your NCD will have 1.1x additional cover on the loan book of the NCD, right? So basically you're going to have 10% extra cover on the total NCDs that's issued to the market. Next question is bit on the ratio side, and it's from Sudesh Nair. The question is: what's the current debt to equity ratio and any plans for more equity infusion? I think Sachin already touched base upon that one, that there'll be further debt as well as equity infusion, and the capital adequacy ratio will be maintained around healthy 28% when the minimum range that RBI specified is 15%. So I just answered on your behalf.
Just want to add, NAVI Group has infused 950 crores of equity into NAVI FINSERV in last financial year. That's a pretty significant, sponsor commitment to the lending business. It has almost doubled our net worth, and that's the importance of lending within the group.
Right.
And we will keep infusing equity as we come closer to our threshold for capital adequacy.
Got it. Basically, NAVI FinServ, NAVI NBFC, NAVI AMC, NAVI GI, and then NAVI Payments.
Yeah.
That's the structure, out of which NAVI FinServ is the largest one as of now.
Yes.
Correct.
This is a very different perspective question from Mr. Sunil Edwards, right? From a very different optics. And probably I'm seeing this for the first time, this category of question. It says, immensely proud of what Team NAVI has achieved. Can you please shed some light on your financial inclusion initiatives?
Yeah, I mean at a group level, we are actually one of the largest businesses that we own. Second largest business that we own after NAVI FinServ is Chaitanya Microfinance,
right,
which is all about rural women.
Yeah.
They have, I think, now close to 5,000 crores of AUM.
Right.
100% of that AUM is given to rural poor women. Right. So that is their customer base. So the whole thing is built on that. Right. So in NFS business as well, a lot of our customers do come from lower income kind of strata, but not as much, not as many.
Got it.
But as I said, in the Chaitanya businesses is all about rural women.
So that's definitely deep, very specific kind of outreach for financial inclusion into the lower stratas of the society, right? Cool. Yeah. So next question is from Mr. Yash Dikshit, and the question is: hi, how will the rate hike, different rate hikes, slashes around the economies affect an NBFC? More on an economics perspective. RBI has paused on the rate hikes for the time being, while Federal Reserve and other central banks are still hiking. How will that affect the business? I think it's a second order degree impact maybe, but it'd be good to hear from your perspective.
Sure. So in last 12 months, RBI has hiked rates by around 240 basis point, and of course everything has gotten little expensive. But for NAVI, our cost of financing has not gone up by that amount. It has in fact stayed very close to the levels at which we have borrowed last year, and that's because there has been rating upgrade. We have been diversifying our sources of borrowing, and we have been going deep into the whole capital market. So we anticipate that rate hike cycle is kind of done. But let's say there are further rate hikes, we will be able to maintain our cost of financing around these levels. And the lending business is such that we have to protect our net interest margin,
Right.
and we will do that.
Got it. There's a lot of questions which are on similar grounds, so just skipping those. Let's find out some unique questions which is there. I think here's a question from Ashwani Goel. It has been answered. Nonetheless, it might prove good to re-share the data once again. It's a question to Sachin, as he mentions. How do you save the data of your customers and investors being misused?
Yeah. No, that's important for us too, because in the internet space, even one mistake of customer data being leaked can destroy your whole business.
Totally.
I think so because the
And even the life of the borrowers we have seen in the
Yeah.
certain Chinese lending apps and those
Absolutely.
stories
Yeah,
which were there.
So no, we take this very seriously. Not even one instance is accepted. We have a very good security team here who is constantly trying to see where are any loopholes or leaks that they're in the system. We of course follow all standard procedures around data center security and things like that. We are very transparent with the users also in terms of what data we are using, what data we are accessing. On the app, if you go through our journey, we will be very clear about what we are accessing and why we are doing that. Of course, we comply with all RBI regulations as well.
Right.
There are very strict regulations on what data we can access and how we need to store it as well. And it needs to be stored in India. It needs to be stored behind certain secure environments. So all that is access control is very closely managed as well within the company. So I think it is a very important area for us.
Right. Yeah. I mean, for a user lending out sharing the personal data.
Yes.
Right. It's like making myself completely open and vulnerable.
Yeah,
to the
absolutely.
institution.
And you don't want to play around with that trust.
Totally.
You want to honor that trust that the people are putting in us, and we're very cognizant of that. Yeah.
Cool. That is a very important, term, ladies and gentlemen. Trust, right? Which is very important for an organization to be able to cater to its customers, right? How do you honor the trust of your customers? By not misusing data, by protecting it in the best possible ways. I think, Sachin, you have well elaborated on that point. There's a question from one of your investors, I guess, because he knows about the mutual fund scheme. His name is Mr. Sachin Sondhi. And the question is, NAVI started passive mutual fund schemes. Any plan to launch active mutual funds in the near future?
We have some legacy active funds that we have. We don't have any major plans as of today to expand them. Our passive strategy is working very fine. It's very differentiated. We are creating a brand around passive, so we don't want to confuse the users also too much by doing multiple things at the same time. But yeah, I think we have some legacy funds which will probably continue, but
you'll stick to the passive funds, right? And probably that's beneficial for the investor as well, right? Because the cost of managing the funds also
is nothing. And our expense ratios are the lowest, absolutely lowest. It's purely tech driven. And in fact, if people don't realize, you can look at the returns of the fund, but when you subtract the fees, that's when you lose most of the money.
Totally. Which most investors are not aware of.
They're not aware of that. I think that's where our funds actually make a lot more money for the investors. you lose most of the money in transaction fees and brokerages and things like that, which is what we avoid.
That's basically the reality.
Yeah.
Also, Abhijit, that's the basic philosophy behind all products in NAVI. They are all simple. You asked about BNPL, you asked about active strategy. Our all products are very simple. Our personal loan is a simple term loan product. You take loan and you repay in monthly EMIs.
We have zero processing fees. We have zero foreclosure charges. Customer doesn't have to think. If you show 50,000 rupees or 10 lakh rupees or 5 lakh rupees on the screen, you get exactly that amount in your bank account. And you can return money the next day if you want.
Right.
Or if you have extra cash.
Right. That's a very important point, because all of this operations at the end is powered by your tech engine, right, which automates everything. Where in a lot of cases I've seen, right, NBFCs would do this manual processing. Obviously, the cost of managing comes in over there, which you have been able to reduce to literally zero. Here's an interesting question on the product front, right? And this is from Sunny Singh. The question is, how is NAVI differentiating its customer-facing product journey in various categories like personal loans, home loans, insurance? Why should customers go to NAVI? Very basic, fundamental question.
No, I think I'll go back to
somebody
the same
looking
thing.
up to you.
I'll go back to the same thing, Abhijit. I think it's simplicity.
Yeah.
This is our aim is to be the most simple, user-friendly place when it comes to understanding of the product, right? Our health insurance product, for example, is the simplest health insurance product that you can think of. Of course, it can simplify even further. I'm trying even hard to even make it even more simpler. Our mutual fund, passive mutual fund, there is nothing you know exactly what you are going to do with your money. In that, right? Or in lending as well. As I said, there's those zero processing charges, zero foreclosure charges. You don't have to think about any hidden costs. We are very transparent with what you are going to get. Nothing hidden, nothing complicated. You don't need the help of any agent. I mean, the goal is that eventually somebody like my mom should be able to use the app and know exactly what's happening, right? Which is very hard, right? Financial literacy in the country is very poor.
Very poor.
In fact, people who are very literate otherwise are not very financially
from a very low literacy
financial perspective. People don't understand simple things like compound interest. It's very hard for us to understand that, right? So I think simplicity is what our differentiation is. We aim to be the place where basically we want to be the most inclusive place where anybody and everybody can come and access finance.
Got it. I'll try to fish out some more variety of questions. There are a huge number of questions which has come in. Okay, so this is from Mr. Rajat Badani, and the question is, what percentage of your borrowings are through the app, or is it a must for all lenders even though they did not get on the platform through its method initially?
I think the question is whether our borrowers need to install the app. Yes, they do need to install the app. There is no other way to borrow loans from us. You can't call into our call center and take a loan from us, or you cannot walk into a branch or go to our website also.
Right.
You have to install our app either on Android or iOS, and then apply for a loan.
Go ahead with the journey. So that's basically the question. The answer to your question, that how do you access a NAVI loan? You got to install the NAVI app, right?
Yes.
And it's a very seamless journey through which you are able to apply.
Yeah.
The next one is a question on the regulations front. It's from Mr. Akshay. The question is recent RBI circular on capping of FLDG for digital co-lending applicable to NAVI? Also, do you feel RBI is going little hard on fintechs? Very difficult question.
Maybe you answer the first one.
Yeah, so RBI has allowed FLDGs, and we were not giving FLDGs, so it has not impacted us as such directly. What it has done is it has enabled the ecosystem to do some kind of credit enhancement for the loans originated by them, and that's about it.
Shobhit, for the benefit of a lot of our viewers who might not be aware of our FLDG, right? Could you please explain the theory behind that?
So FLDG is first loss default guarantee. It basically means that someone, let's say, is good in attracting customers and originating loans, and they are selling it to lending partners like bigger NBFCs and banks. When they do this, they tend to give some kind of credit protection. Earlier, they used to give 100% credit protection, that any loss that occurs on this, it will be made good by the originator. Now, RBI has capped that FLDG to 5% because they don't want players who are outside the ecosystem or who are not regulated to take risk, right? Because RBI regulates this space. So that's the regulation. They've allowed FLDGs, but they've capped it at 5%. NAVI was never giving.
We were never in the business of giving FLDG, and we don't have any plans to do that anyway. So it does apply to us, but it doesn't matter.
Got it.
Yeah. So I think to the second question, is an interesting one. RBI has been evolving their regulations quite fast when it comes to, especially in the last 12 months, the velocity of change has been a lot more than what we have ever seen before, right? I wouldn't call it harsh or too strict. I would say I think it's just a learning process that RBI is going through. The whole ecosystem of RBI is going through this learning process of, okay, this is a new animal. We need to understand it. We need to control it.
Yeah.
Because as it becomes bigger, it will become systematically important and can cause systemic risks in case something fails here, right? Big time. So I think that's where it's coming from. I would say sometimes they go overboard, sometimes they backtrack a little bit. That calibration will continue to happen I think we should expect that to happen over the next few years until it stabilizes. Similar to banking regulations, right? And banking regulations went through a huge amount of flux 30 years ago when privatization started, right? So I think similar to that, we are in a similar moment today.
Right. The same thing, can be observed on the SEBI's front also. So SEBI has also got a huge velocity of introducing changes, right? Way more frequently than what it was.
Because crores of people are now coming and investing in stock market, futures and options. The protection of the investors becomes
paramount importance. Though, to a layman it might seem too many regulatory changes, but at the end of the day, it's for the the retail investors' money.
But given that,
retail investors,
if you look at US or Europe, right, we are still unregulated as compared, very less regulated as compared to those.
Very relaxed. Still, we have got a relaxed mode, and we can experiment with new stuff, right? I think, this is going to be the norm as we move ahead from being a developing to a developed nation, right?
Yeah.
Even in the bond market, if you see, right, the corporate bond market stands at 15% to the total GDP of the country, right? In US, it is 123% to the GDP, right? Now, if you have to scale to that, you need to have iron rails to protect investors.
Both in the debt market as well as the equity market, the depth is still needs to be developed even more. We are far from where our optimal state should be.
Yeah. Different kind of a question from a very different perspective. Running a business from Bangalore, tech-based, especially lending, don't you think you are challenging the likes of SBI, HDFCs like giants? How do you see as a journey forward?
Yeah, I think Bangalore is a great place for tech talent, right? So if you want to build a large, high-quality tech team, this is the place to be. And yes, I think it's a bit of a challenge because most of the financial world, including RBI, is centered around Mumbai, right? And Bangalore is not central from finance perspective. But I think we see the synergies of people sitting together. The technology teams as well as the business teams and operations, all of us sitting together in the same building in this office that we are sitting in right now. Collections people, everyone, right? So it creates a level of collaboration that is unparalleled. Right. If we had split that into multiple cities, we couldn't achieve that, something like that. I think, but I think RBI is also taking note of this. I think they have opened an innovation hub not far from here, maybe less than 3 kilometers from our office. Most of the fintechs are based in Bangalore.
Right.
Most of the largest
Equity brokers, stock brokers, they are also based on a bank.
Zerodha and PhonePe and
Totally.
everybody, right? So lots of finance tech stuff is happening in Bangalore. So hopefully we'll force people to move here.
Time to reduce a little bit of financial density in Mumbai.
Probably, across the country and pull everybody over here to build up stuff across all verticals. Ladies and gentlemen, so that was very, very engaging discussion with Sachin and Shobhit, right? And with that, we come to the end of our discussion today. We have tried to answer all the, unique questions which were there. Nonetheless, what we'll do is we'll collate questions as per the categories. We will, get in touch with Sachin and Shobhit. Their team will take the clarifications and will send it over to everybody who has attended this session so that you have answer to your specific queries. Reiterating the fact once again, NAVI's public issuance, the second issuance, actually opens on July 10th, which is the next Monday, right? And it is available across 5 tranches. 3 tranches are for monthly payment, 2 are for annual payment. Highest 11.02% coupon payable annually, and the lowest one is 9.75% payable monthly, right? And you can apply both online and offline through a seamless digital journey of UPI or through paper-based applications, right? All the best to you guys, right? And thank you so much for your valuable time.
Thank you.
Thank you, ladies and gentlemen.
Investments in debt securities are subject to risks. Read all the offer-related documents carefully.